Welcome to Markets Now. I'm Michelle Rourke with Bryan Doherty of Total Farm Marketing. We saw a lot of red on the board in the grain and cattle futures, even milk on Friday. Hogs about the only thing that were higher. And let's talk about the pressure in the grains, Bryan. We ran up into some chart resistance in a few instances. So some of it, was it profit taking or was this more about weather?
It was both, but primarily more about weather. When you look at a day like today, December corn futures, let's start with that one, hit 447. Looked like it might have been on its way to try and test 450. It couldn't even get there. Traders went in and quickly sold that, took advantage of that. It's what I call a trader's market. That is, we're trading between a range 435, 450, and the trade will try and scoop some dollars off in between there until it gets a better perspective on what the weather's going to do. And that's really the capping variable in the corn market and probably beans right now is that you've got a forecast that just doesn't offer a lot of reason to jump in there and buy because there's rain in the forecast, above normal precipitation. It's going to get warm, but one of the things a lot of our producers have told us they really need some more heat units this year. So this is gonna help kind of propel the crop along. So I would make the argument weather and then technicals, and then maybe outside influences. I don't think the war or Israel, I, Iran, any of those have much impact this week as much so as the weather does.
So if weather does not start to threaten the crop, do you think that the market continues to drift here next week?
I think the odds are likely the market continues to drift. I'm not a bear at current price levels because these are still really good value. And I should refrain. I'm not a bear at current price levels at this time of year, but it'll be easier to get bearish if the extended forecasts continue to work in the favor of crop production. But let's not get over our skis. It's only June 20th. The longer range forecast, both the 30 and 90 days from the National Weather Service, continue to suggest the Western Corn Belt stays below normal in precipitation and above normal in temperature. In fact, the whole nation on the 90-day outlook. And we all know beans are really made and more in that late July, August time window. Last year, that drier pattern really did impact the yield. So with a current record yield forecasted at 52 and a half bushels an acre, it's real difficult for me to get too bearish until feel or we see a better confirmation that we're actually on the road to that type of yield.
Yeah. You mentioned running up into resistance on corn. We did the same thing in soybeans. It kind of put a bit of a reversal in. Is it a concern there or not technically?
Well, technically, it's a kind of a concern because I say kind of because the bean crop actually kind of lost some, not kind of, it lost some crop ratings here the last couple of weeks. It's been small, but it has had a rally, and it rallied on the heels of less than great crop conditions and on bioenergy announcements that were positive. But when you post a double top on a chart and you post it with a bearish key reversal on a Friday, which means today's range in November soybeans traded higher than yesterday and lower than yesterday, hit a new high for the move. That is the trend that's up in the near term, and then close lower. That's not the most promising signal. Those are sometimes things that kind of stand out on a chart. I see it, Michelle, you see it, everybody sees it. And if the market doesn't pick up some steam pretty quick to the upside, traders look at that and go, you know what, we got some handwriting on the wall, we got a signal. Let's make sure that we're selling into that signal.
The reversal that we saw in the soybean market, is that an indication that the market has priced in this biofuels news, or are we
Oh,
only watching the soybean oil market for that?
well, soybean oil market, soybean meal market have gone on divergent paths, right? So
Absolutely.
you're not clicking the complex on all three. Let's call it a big three-cylinder engine. You got beans, bean meal, bean oil, and one of the pistons is fouled out here. So you've got some strength from the other two, but you're probably going to get so much out of it. No, I think the beans have, from the bioenergy sector, it's certainly received support. Farmer selling has not been, uh, I don't believe, very strong. Whether it's 10.50, $10, 10.75, 9.75, none of those prices penciled out real good for farmers. So they're being patient. They may have rewarded the market at the end of the week here with some initial new crop sales. The driving factor, though, pushing prices, I still think is probably more weather related with the crop leveling out in the crop ratings the last couple of weeks Warm weather is certainly maybe going to turn this crop around if farmers who are drier get some rain with it. But I can tell you, talking to a number of farmers in a number of states, one probably the consistent theme I've heard was, boy, these beans are just not very big. They're small, and it's not the kind of crop that looks at present like it's going to reach into a record yield territory.
We did have higher weekly closes. Was that weather, or is that you said you don't think anything is trading or putting war premium in? You don't even think that was part of the story in the wheat market this week?
Well, the war premium hasn't been part of the story for 2 years. So maybe it was part of it this week, and the trade saying, look, we just don't want to be short wheat in this environment. But I think the backdrop to that, again, as you look at this weather forecast, they just can't get at the wheat harvest in an aggressive fashion. And you start to hear more and more language and people talking, farmers talking about disease concerns, can't get at it from a premier optimal time to harvest, quality concerns, high winds here earlier. I should say earlier midweek here, knocking some of the wheat over, making it very challenging. So I think it's a combination of weather, technical buying, and then a lack of selling interest by farmers on the rally because all of a sudden they don't know what they've got. A lot of them expecting to be in the field a couple of weeks ago already.
Yeah, and the funds are so short in that wheat market. Some of it's short covering, isn't it?
I think a day like Wednesday, when the market really just all day long was moving higher, and then it would set back a little bit, and then it would move higher, and then set back a little, move higher. That typically, in my opinion, is a lot of contracts that are trying to exit. So they put a buy order just below, it sets back, and then it pushes it back higher. And if, in particular, the close on Wednesday was really impressive. That to me is a short cover rally. That isn't typical of let's just say lack of farmers selling. There's something pushing that market. Typically, it's covering the short positions, and usually it's managed money.
Cattle futures could not hold on to the early gains here today. Do you think that was because of this lower cash or just some squaring up ahead of the report?
Both. Probably the cash was the tipping point when prices rallied this morning and then couldn't follow through. And I think the trade was pretty quick to square up into the report. There's been enough volatility that the bullish traders have sort of been scared a little bit here because we've seen where the cash market has stayed strong prior to today, but just been a good, strong cutout value market, record high levels this week. Yet there doesn't seem to be an appetite to buy futures at the higher level. And I think we're getting to a point where cash has to prove that it can hold for futures to move higher. Otherwise, I think there's some defensive posturing. You could actually make the argument that since mid-May, you look where August live cattle futures closed today, closed a little bit lower than where the market was trading a month ago. So we've been higher, we've been lower, but if you look at the spread, it's not a lot different. So losing its upward momentum. And I think when you lose upward momentum, the trade itself and ranchers will hedge into that or go defensive into that in front of a report.
Hogs also to the plus side, and we continue to see not every month today, but a lot of new contract highs, it seems like. And we're getting pushed by the cutout value. So is this mostly about demand or not?
It's about demand and it's about the retail sector trying to find a substitute for high priced beef in their counter. And they've gone to the pork industry, the poultry industry, but it's where the consumer is looking as well. Beef is just a high price product. And as you and I have talked about, we don't think in an upward trending market with a supply sided problem, and I'm going to say problem is too little supply, that you're going to develop new demand markets. So you got to sustain your old demand markets, and I think beef can only do that for so long. And it seems like maybe we're starting to see cracks in that lining on the futures market. Now the cash this week maybe off today, but cutouts real strong. But remember, the futures is typically ahead of cash and is looking ahead. And I think that's why you see the buying in hogs and the selling in cattle this week.
And the milk market mostly lower here. And in fact, we have seen a pretty steep downtrend since we hit those highs at the end of May. What is pushing that, and does it continue much farther here?
Well, production's pushing it. Generally, good weather up to this point, good production per cow, efficiency is strong. Feed availability is good. It's relatively cheap. High beef prices are keeping that industry really, in an expansionary phase, ever so slow, but it's expanding because there's so much value on a beef calf right now. And so the challenge with the dairy industry is to sustain a rally. And we've seen repeatedly now where the market just doesn't have the appetite to chase higher prices when they rebound, especially as quickly as the milk market did. And now it's quickly giving it back, left a gap on the charts. World markets started to show some better strength. We're seeing some strength in the European markets. But again, we're not seeing anything significantly out of the ordinary that tells us the herd is contracting, demand is on a big upswing, that we're improving the overall export market. We're seeing a lot of volatility to it. The good news is when prices drop off like they have, we generally see some market clearing forces come into play. That as the cheese market picks up. But I'm a little concerned the way the cheese market just sort of imploded on itself the last 2 weeks. Not a real good picture when you're trying to sustain prices, and consequently we were down. Big head and shoulders formation on the charts, left a gap 6 weeks ago, and now right on the verge of filling a gap after a rally with that head and shoulders. Not necessarily where we want to be.
No, for sure. All right. Thanks so much. Brian Doherty with Total Farm Marketing. That is Markets Now.